Warren Buffett, the greatest investor of all time, has been quietly building a record $344 billion cash pile in his pocket. And here's a kicker. Between late 2022 and mid 2025, he sold over $177 billion in stocks, his biggest net selling spree in history. The last time he did this? Between 2005 and 2007. 2 years later, the global financial crisis nearly broke the world. So why is Warren Buffett unloading now, and what does he see coming? So in this video, firstly, I'll reveal what Buffett is planning and why he's sitting on a mountain of cash. Then I'll explain where we are in the bigger 18-year real estate cycle that has predicted every major crash for 200 years. And finally, I'll show you what this means for us as investors and how we can prepare. Now, if you're new here, I'm Ace, and I have a bachelor degree in finance and equity investment, and I built a 400k plus portfolio in my early 20s by applying Warren Buffett's value principles and studying cycles like the one we're in today. Now, looking at my portfolio, I wasn't given all that money. I built that money by learning how to position with the cycles, and right now, all the signals are pointing to a historical setup. And when I first started investing, I thought Warren Buffett's advice was very simple: buy and hold. But if you dig deeper, you would see that he does something else too. He changes how aggressive and conservative he is depending on where he is in the cycle. For example, in 2005, Buffett raised his cash level to nearly 50% of his equity, and people mocked him. Then came the 2007 peak and 2008 collapse, and suddenly he was the only one with billions of dollars in hand to buy world-class businesses on sale. And now he's doing the exact same thing again. Record cash and record selling. History doesn't repeat exactly, but it always rhymes. Now let's start with the first point. Point 1. What Buffett is planning. Now, a quick disclaimer, I am not a financial advisor. Everything I share here is just my opinion for education and entertainment. Always do your own research before investing. Alright, let's get back into it. Now, currently, Warren Buffett's cash pile is somewhere around over $344 billion, higher than ever. He's been a net seller of stocks for 3 years straight, and this is not something new. Warren Buffett has been doing this for a long while, and he always does it before a market crash, just like he did in the 2008 GFC. Why? Because he thinks everything is overpriced right now. Just look at the Shiller PE ratio. We can see that at this moment, the market is trading at almost 40 times its earning. We are almost at the same level as the internet bubble back in the days where the market Nasdaq fell by 80%, and we have already surpassed the GFC level where the market Nasdaq fell by almost 50%. Not only that, the Buffett indicator, which compares the total market capitalization to GDP, stands above 210%, the highest in history. This shows you how speculative people are with their investments. And right now, everyone is extremely optimistic, which is never a good sign. Warren Buffett famously said, "Be fearful when others are greedy, and be greedy when others are fearful." So, what is Warren Buffett's plan now? Right now, Buffett isn't hoarding cash for fun, he's waiting. He's like a lion in the tall grass, conserving energy while there's not a lot of prey and food around. But when the migration begins, when the animals are coming and are plentiful, lions, they unleash their conserved energy. They go all out and hunt, going after the largest and most rewarding targets. And a single successful hunt like that can feed them for days, even weeks. And this natural principle has been in the world since the dawn of time. And it applies to everything, including investing. And that the best investors do the same exact thing, and so does Warren Buffett. So during market tops, when prices are sky high like right now, he conserves cash and stays patient. He doesn't chase, overpriced stocks for, a little bit of gains. Instead, he waits for the market to inevitably correct when opportunities are abundant. And when that moment comes, Warren Buffett moves quickly, buying up billions worth of undervalued companies with the potential for enormous long-term returns. Just like a lion targeting, a wildebeest, he focuses on the big wins that will sustain his portfolio for years to come. And that's exactly what he did in 2008, buying up billions worth of Bank of America and Goldman Sachs when everyone else was running away. And those bets made him billions of dollars, and he's about to do it again. But when will that actually happen? And that brings us to the second point of this video. Point 2. Where we are in the bigger cycle. Now what's happening isn't just Buffett's gut feeling. The 18-year real estate cycle, based on over 200 years of data that has predicted all the crashes like 1929, 1999 and GFC, is flashing the same warning right now. And right now, we're in the winner's curse phase, where we see mania in stocks, speculation in crypto, and money chasing AI at no price too high. And this is exactly what has happened before the 2000 dot-com bubble, 2008 GFC, and even the COVID crash. The cycle is saying the next peak is in 2026 and 2027, and this lines up perfectly with Warren Buffett's moves right now. By hoarding cash now, he's preparing to buy when forced sellers drive valuations into the dirt. And by the way, if you do want monthly playbook on how I'm positioning in this cycle, check out my free newsletter in my bio. Point 3. What this means for us investors. So what should we do? Now firstly, accept where we are. Currently, we are in a very high valuation market. Shiller PE ratio near 40, Buffett indicator over 200%, AI hype everywhere. That's danger, not safety. Second, protect yourself. Right now, I'm reducing my exposure to speculative investments and avoiding being over-leveraged when liquidity tightens. Crashes always hurt the most when you're overextended and you're too invested. Third, build a war chest. Cash isn't trash when assets are overpriced. In fact, it's optionality. It gives you the power to buy when fear takes over. The 18-year real estate cycle actually tells us which industries actually thrive and do really well after the crash. For example, infrastructure, housing recovery, and eventually commodities. That's when the real 10x opportunities are born. And Warren Buffett knows this. That's why he's sitting on a record $300–400 billion waiting. However, the question is, will you be ready when that crash comes? Well, there you have it. Buffett is now warning of a crash bigger than the GFC, not with words, but with his action. Record cash, record selling, and perfect alignment with the real estate cycle. Now, if you do want my full insights and monthly cycles, information, subscribe to my newsletter for more. And I do want to hear from you. Do you think Warren Buffett is right? And are you preparing for a crash? Drop your thoughts in the comment section below. I'll be reading.